Hi, this is Lara at Elliott Wave Stock Market with your Dow analysis for the trading week beginning Monday the 8th of August. I'm recording this video just gone midnight New York time on Sunday evening, so it's very early Monday morning before markets open for the new trading week. Last week saw some pretty explosive downwards movement from the Dow, confirming my main wave count on the daily chart and invalidating the alternate. This main wave count sees a cycle degree trend change up here. I have the credit crunch drop as a cycle degree wave A, and this upwards movement here is zigzag for a cycle degree wave B within a supercycle zigzag. So this is where cycle wave C starts. It must be a 5-wave structure at primary degree, and I expect we're still within primary wave 1. I may move the degree of labelling for this piece of movement all up 1 degree in coming weeks. I'll see how this one unfolds. It depends how long this third wave turns out to be. If it turns out to be particularly long, this could have been intermediate wave 1 and 2, all still within primary wave 1, subdividing in 5 waves to cycle degree wave C. So we're still in the early stage of cycle wave C down. If we look at the long rise of the so-called recovery on a weekly chart and draw a nice trend channel around it, it's very obviously breached to the downside. So now not only do we have a huge trend channel breach on the daily chart, we also have a trend channel breach now on the weekly chart, giving us further strong confirmation that the Dow and the S&P have had a very big trend change. When price moved below this low, after Tuesday's session, to a new low, after Tuesday my main wave count was confirmed, and at that stage I was expecting further strong downwards movement with increasing momentum, and that's pretty much what we've got. Wave 3 blue at 11,111.64 will reach 1.618, the length of wave 1 blue. At 10,098.17 it will reach 2.618, the length of wave 1 blue. So these are my two targets for downwards movement to end. Within this third wave, once I have the end to pink wave 4, wave 3 blue must subdivide a pink or minute degree into a 5-wave impulse. That's the only allowable structure for a third wave within an impulse. And once we have an end to the 4th wave within it, I can use the ratios between 1, 3 and 5 to refine these targets. At this stage I just have these two targets which are quite a long way apart from each other. The long-term bigger picture sees overall cycle degree wave C beginning at this high at 12,876 to eventually reach equality in length with cycle wave A at 5,052.91 points. And the cycle wave C wave should last at least 1 year, if not quite a lot longer. The credit crunch I think was about 17 months, so we may see the cycle wave C last about 17 months, maybe a bit longer. We'll see how this one unfolds. I can be a little bit more confident with this price prediction, just over 5,000 points most likely being reached, than I can with any time at which this point may be reached. Taking you now to the hourly chart where the high for 3 blue is this point up here. I have a leading expanding diagonal here for the very first wave, a little zigzag for a second wave, 3, 4, 5. This is the first 5-wave structure down within wave 3 blue, which must subdivide a pink or minute degree into a simple 5-wave impulse. Within pink wave 3 we have 1, a double zigzag for 2, and now within green wave 3, 1, 2, an extended 3rd wave, 4th wave and a short 5th wave. There's a small 4th wave correction and a small 5th wave in here. I'm not going to label this high to this low as one single impulse because it just doesn't fit very well. It looks much more likely to be a 3, 4, 5. There's a 3 waves in there, not just one. And I've checked this very carefully on a 5-minute chart and looked at all the subdivisions there. So this is how I've decided to label it. There's another option for labeling it, still having these same subdivisions in here, and then I could move some of this degree of labelling up 1 degree, and then this would be the end of wave 3 blue in its entirety, and I'd be calling for, in the short term, a short-term low and the beginning of a correction which should move price higher and mostly sideways for a week or two. I really don't think that's the case though, because there is no divergence as price is trending lower. MACD is also trending lower, particularly towards the end of this 3rd wave. We still have MACD making new lows, and it has its lowest reading at the low here with price. With absolutely no divergence at this stage, I expect that this 3rd wave at blue or minor degree is still incomplete and we're going to see further downwards movement this week also for the Dow. In the very short term, when the markets open on Monday morning in New York, I would expect it's most likely to see a little bit of upwards movement. The most likely target for that is 11,757.4 points, where the small wave C within the fourth wave zigzag will reach equality in length with the small wave A. And when the C wave is a satisfactory 5-wave structure, which you can see on the 5-minute chart, there you can see its subdivisions, when that's complete, I'd expect some further strong downwards movement from the Dow to end this third wave. Wave 3 blue may end, as I explained on the daily chart, about 11,111.64, which would see the fifth wave relatively short in relation to the third wave, or it may see the fifth wave at pink degree quite long, possibly reaching equality with the third wave, and price may end about 10,098.17. Once I know where the fourth wave has ended with certainty, then I can use the ratio between 5 and 3 and 1 to refine these targets for us. 4 may not move into 1. Unfortunately today the invalidation point is a long way away at 12,289.55 points. I would expect the fourth wave to probably overshoot this trend channel, but this is not drawn exactly according to Elliott's technique. The first trend line is from 1 to 3. The second parallel copy should normally be placed on the high of 2. In this instance it would give too narrow a channel, so I've placed it further out on the end of this second wave of a couple of lower degrees, 3 degrees lower. This quite nicely contains this downwards movement. I expect the fourth wave, if it's to reach this target, may actually slightly overshoot the channel, but because this channel is not drawn using Elliott's technique, I would not then necessarily expect the fifth wave to overshoot it on the opposite side on the way down. It's pretty common for fifth waves to end midway in these channels, so that's where I'd be expecting it to end. Overall, I think we're probably going to continue going down this week for the Dow, if not most of the week, perhaps even all of the week. I expect there is still further downwards movement to go, but we have a correction coming up fairly soon, which may begin by the end of this week, which should last a week or two, and move price mostly sideways and somewhat higher. That's all for me today with your Dow analysis, and I do hope that everyone else had a fabulous weekend.